Greetings, and here's the market recap for week 9. A big week for COVID this week. We'll discuss the grey market and China's trade war, and will Aussies be paying more taxes after the pandemic is over? And so here's the COVID update. The Greater Sydney region lockdown looks like it will be extended beyond next week, as case numbers and community transmission continues to climb, with 850 new COVID cases just this week alone. Head of Australian Economics Gareth Ard, supported by other premiers and economists, said it is currently impossible to forecast how long this will last. However, if cases in New South Wales don't drop in the next weeks, the lockdown could become a permanent feature until vaccination rates reach a desired level. Immunologists suggest 80% of the adult population. However, Berejiklian lowered the target to 60%. Economists from Commonwealth Bank said tighter restrictions and rising cases in New South Wales, coupled with lockdowns in other states, could cannibal short-term growth. Gareth Ard commented, "These developments mean the hit in third quarter GDP will be a lot larger than 1.4% flagged last week. If cases do not peak by next week, it could push Australia into a second quarter of negative growth, characterising a second recession in the space of just 2 years." Lockdown has also resulted in millions of Australians turning towards Centrelink as they're unable to work. However, more than 1 million of Australia's poorest are locked down and shut out of emergency COVID payments. The Australian Council of Social Services, ACOS, urged the Morrison government to back down from the decision to exclude this group, warning it is becoming a public health issue. ACOS CEO Cassandra Goldie commented, "People can't stay home in lockdown if they lose their home because they cannot afford to keep it." It comes after the Job Seeker Supplement, which rescued 150,000 residents from homelessness last year, was terminated earlier this year. The groups largest affected are students, older women, single parents who have been hit hard by the pandemic again and again. To the grey market in China's trade war, Hong Kong has become a crucial player in Australia's trade stows against China, with the port city now a black market hub for Aussie wine. In November last year, China introduced crippling tariffs of up to 212% on Australian wine exports. This began after Prime Minister Scott Morrison angered the communist nation by calling for an investigation into the origins of the coronavirus. However, Hong Kong has spent $186 million in Australian wine in the 2020 to 2021 financial year, an annual rise of 111%, indicating an illegal market, as wine imports flow through Hong Kong as a backdoor to the mainland. It's good news for Australian producers. However, Mr. McGregor stated, "The grey market is not likely to ever be more than a relative fraction of the profit we can bring in if we trade directly with China." And are Aussies likely to have to pay more tax after the COVID pandemic is over? The answer is yes. The biggest unstated message from the intergenerational report released by Treasurer Josh Frydenberg last month is that we need more tax. With the support payments and packages being offered during the course of this pandemic, when the economy is healthy again, taxes are going to have to rise and rise by a lot. The report identified spending on health alone is at present 4.6% of the GDP. However, is projected to climb to 6.2% over the next 40 years. To fund that alone, the government will need to collect 6% more tax in 2061 than it would have if health spending remained the same as now. And that's it for the market recap. Stay safe and have a good week.